Hello guys, very good afternoon from where I am. I hope you're doing well. Today I want us to analyze gold. We'll do a top-down analysis. Start from the monthly. From the monthly you can see that it was bullish, came from here to here, came retested, I think in the middle of that, no need of the Fibonacci. So expect it to form a new high, which it did. It broke this structure. What caused that break of structure? It was coming down nicely, then from here we saw a shift in the momentum from bearish to bullish. Nice. As you can see, this came here again, broke this structure. So the order flow from the monthly, you can see it has been bullish. Order flow is where what I mean by order flow is where the order blocks are sitting. So this reacted to something. From here there was a imbalance, so it reacted to maybe this 50% imbalance, and then it went up, came down again. This move did not break structure. We only look for order blocks when the structure is broken. So what you can see, this move, it formed a base here, RBR or DBR, whatever you may use. So here there is another block sitting over here. This is from the monthly. You're looking at targets if you're going to be doing anything. So this can be refined. I think there should be another block here which is untapped. Let's look if we can see another block there. There should be another block somewhere here which is untapped. This is too far back. I don't know if it will reach there. It's too far back. Okay. And I don't think it can go beyond that. So I'll just look it on the far. Nice. So here there's a last candle which is untapped or unmitigated. So this is the place where the market will come to tap it if it is to go and again break this high, this monthly high. Oh, sorry, Mattia. So we know that every move, if it broke structure, it must retest to this before it, anywhere here or here, anyway, it can do anything it wants. Even this is another block. So I'm not limited to my analysis. So as you can see, from that was the monthly. From the weekly, when we move to the weekly, we can see the market structure has started being bearish. even from the monthly. So it came, formed a new high. This is it formed a weekly high over here, and it formed a weekly low. It broke that, came here. This is the new weekly low. So the way I look at the highs and the lows is that I look for, this was the last candle before it started going down. If maybe, let's say, this was the last candle and then it pushed up, I will not call this my low. I'll take this as my low, because I'm looking for these candles to break this low of the last candle bullish, which it did. Even by it missed, no, it did, it break. So it formed a new low over here, and the high, this candle, this bullish candle broke this. It came, so this was the new high. This candle came and broke this, the new low. So the market is still in between this. So let's move to the weekly. On the weekly, this, as you can see, break of structure, break of structure. So from the weekly, the order flow is bearish. It has been reacting to this somewhere here. So what will we be expecting? So right now this has already reacted to that. There's also a trend line over here. So the next move here, there's another block over there. But what I want to see is, this will be better if I do it for the market first to break this low, and then look for a new order block for a possible move to be bearish. So, and this, by knowing this is how we knew this week we were bullish. It was just a retest, so I don't expect it to break this. I don't expect it to break anything over here. So this is the new weekly high. Let's move on to the daily. So the daily has been coming back. It has been bullish. Double bottom here. There's liquidity sitting over there. As you can see, as I was saying, this has been reacting to the other blocks. You can see here there was other block sitting there. It reacted to that. So what I do is, for this, I take I'd go to the 4-hour. This last move that broke the structure. So it came first, then again, then this move over here broke the structure. Structure was broken again over here. And remember this, we are doing a confirmation of this entry, of this sell. So what I'd be waiting for, this order block got tapped in, but this one wasn't, because there was another break of structure. So this is the first order block I'll be looking to enter sell. So for now, market is bullish. although there is another order block over here, but no, break structure, because I said that for this to be a move, it has to break this previous candle and close above it, which it didn't. So yeah, this was not a break of structure. The break of structure was over here, as you can see. Besides that, there is for this move that broke this structure, its order block is still unmitigated. Yep. So this will be the second order block to look, and remember that this is confirmation of the entry, maybe if there, because if you wanted to enter on the daily, this stop loss and take profit will be the stop loss will be too much, the risk. So you want to take a lesser risk. So you're looking for confirmation. We're just looking for this move, breaks of structure in this order block. So these are the two potential entries which have a lower risk when you enter. And even if you want, you can refine these order blocks, and even you can do a confirmation within a confirmation. That basically means that you can wait for price to come over here and wait for another break of structure. This is a 4 hour. You go to the 30-minute. When it gets there, what is this, bro? Okay, so what was I saying? So you can wait for price to first come in here, or the other one. I'll just use this one for the example. So it's coming nicely, forming higher highs and higher lows, and then it breaks structure. So when it breaks that structure, you could wait for it to mitigate another block inside that move. That's up to you. And I've said it can react off this or it cannot. It might not respect this, because the market does what it does, what it wants to do. But I hope you can say, if you want to swing it, you can swing it to either here. That's all up to you. That's what you want to do. So yeah, that has been gold for today. I hope you enjoyed it, and if you like the video, leave a thumbs up, like the video, comment and share, and ask for a pair to be analyzed. I'll do it. See you guys on the next one. Thank you.